Good afternoon. This is Steve Young for the Co-Roundtable. It's early November 2020 after the American presidential election. But I want to talk a little bit about a common theme around the Co-Roundtable, which is the value of companies. There's value, and then money usually we think of, and then there are values. But capitalism revolves around pricing, around monetary value. So how much is a company worth? And what do you have to do to have a company worth a lot or worth something or be successful? Because the value of a company is in some way a fair measure of what it does for society. And recently there have been a number of sort of interesting developments in capitalism that I want to report to you. So first, I did talk before about the issue between Tiffany, the luxury jewelry company of New York City, very famous, and LVMH, another company with major luxury brands in Europe. They wanted to buy Tiffany, and they made an offer, and it was sort of accepted. And then with the pandemic, the virus, an argument began as to was Tiffany really worth as much as LVMH proposed, and they kind of wanted to back away, and Tiffany said, no, we're worth a lot. Well, they have now come to an agreement. Originally, LVMH offered $135 a share for Tiffany. The new price is $131.50, which means that LVMH has saved $430 million. It's a lot of money in buying Tiffany and being able to absorb its profits. The question is, which we should ask, because a lot of highly paid accountants and financial experts and lawyers worked on it, how do you estimate a true, a correct, a reasonable value for Tiffany's? Then there was another issue. Nestle S.A., a very large food company, took over all of another company called Freshly, which measures the value of Freshly, which has a special niche at $950 million. So this is Nestle buying all of Freshly to capitalize on new opportunities that Freshly has to make more money. So it's now worth more to Nestle. And that is, it's a packaged food company which can capitalize on the pandemic-driven shift towards at-home dining. So there are changes in the market of customers. More and more people, because of the pandemic, are going to eat at home. They want convenience at home. They want to buy a package, bring it home, eat it, but feel good about what they eat in terms of taste, vitamin, nutrition, etc. So Freshly is in a position to sell more. It may even be in a position to raise its prices per unit. If it can generate more revenue, it is worth more today. And Nestle is willing to pay more money in order to get a hold of that stream of revenue in future years. But on the other hand, companies their prospects can turn against them. So there's another story recently that the Altria Group, which is a tobacco cigarette company group, it bought Juul Labs, Juul, which makes sort of smokeless, I don't know what you want to call it, smokeless or non-narcotic, non-cigarette, non-tobacco-based smoking. And they think Juul is not worth so much money anymore because the market is changing against it. So they have marked on their books, their own estimate of Juul's value is now $5 billion less, or half as much as what Juul says it's worth. So who's right? The Juul people or the Altria people? Again, what's the calculation? How do you know the value of a company? Another interesting to me, play on valuation involved a South African conglomerate, Prosus, because they own 31% of a Chinese company called Tencent. Now that value, that 31% value, is estimated at about $226 billion on the stock market, or it's just estimated. But Proteus is only valued something like $85 billion. So Proteus is not benefiting from its share of the value of 10 cents. So in order to raise its value per share, Proteus is buying back shares of its stock and shares of a related company. The fewer shares that are in the market, the higher the price of each remaining share. So this is what we might call financial engineering. In order to have a market price which is supposed to reflect the underlying value of the company, which includes 31% of a Chinese company, one might really say that what the market is doing is pricing something else rather than a share of 10 cents, because they don't believe that the South African company will ever be able to get that much cash out of the Chinese company. Again, how do you calculate the value of a company? And then another story, rather different, but it's always interesting. How much is gold worth? What do you do with gold? You can't eat it. Big bar is kind of heavy. You can make it into jewelry basically, but it's really something that other people may want to have because they believe that still other people will want to buy it from them at some solid price, some reliable price. And so if you think the value of the dollar or the euro or the yen or the yuan is going to go down, classically you try to find a safer place to put your money, so you buy gold. But recently, the gold price has not been going up as stock markets have gone down because of the virus. So again, who determines the value of gold? Does it have a real value? Or is everything just transient, nominal, here today and gone tomorrow?